Hi everyone, let's have another look at the markets. It's been a wild week. The market bottomed last night in the 1970s on the E-mini, S&P E-minis, and so far it has held those gains and gapped up this morning, although the charts don't show it because this does not show overnight action. That's extremely concerning to me um, because I don't trust when the market bottoms overnight. That's pretty rare. Markets tend to be more reliable in bottoming when they do it during the day when there's more market participants. When it happens overnight, it's more of a light volume squeeze when no one's looking. So we basically came down into this area, 1970, right where I have this white line drawn, really, to fill that gap, and then open back up above it, 30 handles. Um, we're still in a downtrend here, as you can see, pretty steep downtrend, and we haven't gotten above it yet. If we come up even a little bit more, we're going to run into some resistance and either go sideways or plummet down and probe the lows again. I still like 1950 as the bottom or a bottom, and that's uh, that's just one target. The Stotch is coming into really oversold territory down here, so we could get a multi-day rally. Some names are doing really well today, and that's hopeful, but that's not the end all be all. It's really hard to know essentially what this market's going to do. Um, there's uh, there's a lot of directions we can go. This is the McClellan oscillator, and it never really bottomed. Something else that I really don't like, that a lot of people don't like. If it got into a negative 200 tick here, that really would have helped us, reading rather, that really would have helped us declare a bottom. But now we're back into no man's land. A lot of shorts have covered because of the overnight ramp um, that was brought on by the ECB saying they're going to print. Um, that's great news for bulls, but this is disappointing action given that news. We could see some follow through. The central banks are definitely working on a package to try to buoy the markets. And the market was ahead of this and figured this out and held the rising 150-day moving average. So we have to treat this like an algebra problem and just work with what we know. What we know is that we're holding a rising 150-day moving average. The 50-day moving average we're below. That's bad, but it's not really declining. It's going sideways. So things are not as bad as they seem. They're just not ultra bullish. Um, they are they're neutral really, and that's what we have to deal with. You're going to see sellers step in. You should see sellers step in unless we have a monster second day candle like this, which I doubt. You're going to see sellers step in around the 50-day. Um, but if we break out of the cloud and start moving sideways, that's really great news for bulls. I still have some longs on. I'm pretty cash heavy, like a lot of traders, because I just don't know what to expect. There's nothing to expect here. There's no way to know what's going to happen. The Qs, this is disappointing. This is a disappointing bounce. On a weekly basis, many of the charts don't look so great. The MACD in deeply oversold territory here. Actually, it's not in negative territory. Let's take the histogram off. The MACD is actually still in positive territory, but it's in a steep decline. The kind of decline that lets you know this isn't over. We need to see a weekly hammer that holds. Um, this may hold. We're holding last week's lows, and that's the bottom line. We are holding last week's lows, so until those are violated, you can see some upside squeezes. But until we get over um, the 103 level, we are stuck in a range. So pretty much forget everything here and just focus on these two lines, 99 and 103. Um, we spent a lot of time in here. 1, 2, 3, 4 weeks. 1, 2 weeks. Back in 1, 2, 3 weeks. We've been in this range a lot, and that could continue. That's pretty good for bulls, all considered, everything considered. This is some pretty down. nasty down action, and yet we're pretty much holding sideways. Not a great bounce today, but next week we can start here and move up and retest the highs. Or we can just move sideways. My instinct is that this level right around here, this band, okay, and think of support as a band. Don't think of it as one number. I expect to see this band in here between 99 and say 98, 97. I expect that to hold. So we have a little more downside in us, but unless we get some really bad news and really start to move down, it's tough to short here. Shorts could very well be fuel for any upside news surprises. We're still in a bull trend. Um, if we want to attach a moving average to this, this is the 50 week, still rising. Near-term support is typically the 20 week. We've lost the 20 week. If you want to be more generous and go to the 40 week, that's also rising. And the 30 week is, some people think, is another key area to make this easier for you to see. And we are right on the 30 week, which is 99.50. We held that. And that's been, as you can see, general support. The baseline, which held us back here before very well, perfectly in fact, baseline is under us. It is at 98.24. So we can still lose a couple of handles on the Qs and be within support, be on the bottom side of this range. That would be a buy setup, but obviously you have to have some courage to step in and buy this because this is a market making lower lows and lower highs right now. Looked like we peaked right here. We do have a gap at the very peak. Not much of one, but we do have one. That's notable. We're spending 3 weeks down here. The market doesn't usually flush 4 weeks straight in a downtrend. It's fairly rare, and it usually leads to a reversal. 1, 2, 3, 4 here, reversal. 1, 2, 3. Next week is going to be pivotal. The end of January is going to be pivotal. I'm probably going to remain in cash until the end of January, until I see something really jump out. Why step in front of that bus? Wait to see what happens. We can flush, come back up. The reversal's on. You can buy, and we move higher. Looking at a monthly, as you can see, we've come in, but we have support on these candles here, especially this one, right around 98, 99. So we can come in, still be fine, and move up. The MACD is concerning here at a monthly. It's rolling over. Excuse me. But as long as we hold this hammer, there's still upside potential. 2 months coming in does not destroy the bull market. We had 2 months here where we came in. We had 2 months here. This is a green month, but this was also down until the very end. We had a couple down months here, 1, 2. Everyone was calling the end of the bull market, 1, 2. So these are bigger moves than these past ones, but it just goes to show you it's not enough. It's not enough to kill the bull. We can still move higher, so be careful with your shorts. IWM looked like it was dead, traded into the cloud. We got a little reversal here, and it's going sideways. Sideways frustrates both the bulls and the bears, and that's typical towards the end of a bull market. You get big flushes, and they're bought up, but you don't make new highs, and that's what we're seeing. So it's tough to be a bull. I'm looking to exit my long positions on any pop. I think we're going to get another pop next week, and it's going to run us right into resistance, and we are going to fade a little bit off that resistance. But we got a decent buy today. We're pretty oversold. We held this candle's lows, 198 during the day session at least. So I'd expect to see another little pop up into the downtrend at the top of this channel. 202 is my target. I have no position on SPY, but that's what I'm looking to see. And from there, I think we could fade. And towards the end of the month, we could certainly test the moving 200-day moving average. The upside seems limited here. We have not, I believe, near term. Always look at the 5-day. We have been rejected off the 5-day moving average. That's not good. um, we could recapture it, but we could just as easily flush down on Monday, big time. Um, so keep an eye on the 5-day. When we lose the 5-day, you want to stay neutral or short. Rejections off the 5-day are pretty bad. Pretty bad news for bulls. We've got yellow getting crossed over here by gray, or if this were green, it'd be red over green. That's a warning sign. So you want to stay away from the general markets. TLT very stretched here. I know some people taking out some bond shorts. How high this can go, I have no idea. It really needs to relax. Otherwise, it's a parabolic blow off move, and those will always fail. This looks starting to look pretty parabolic to me here. Um, this has really blasted off, and I don't know how high this goes. Um, we could get a move up to 138. Markets round numbers. We really need a pullback of some kind unless the world is completely ending. The dollar is soaring, bonds are soaring, and gold is soaring. This is all really bad news for the bulls. The only good news for the bulls is that these things are due to reverse, just revert back to the mean, and that alone should give the bulls a little near-term breath of air. Apple week, Twitter week. These are 5-minute charts. These are going sideways. Just have a look here. That's not good. Obviously, I almost took a short yesterday on this, and now I'm really ticked I didn't. Flushed really hard. We're holding the lows here. We're holding 36, 35-ish. This could come down even more. I don't like Twitter. It looked good. I got out, gave a wait and see approach. It flagged, and the flag failed. Both flags aren't bulletproof. Okay, so don't get too wrapped up in that. VIX looks like it's hitting some resistance here. That's good news for the bulls. It can still pop. One more pop would definitely be the end of this downtrend, of this flush. The 1950-1940 region would offer great value on the S&P. I'm still generally long-term bullish. I think this volatility is going to end here pretty soon, and we're going to resume an uptrend, but it's going to be really volatile and wacky. If we are in a bear market, which is possible, you get some very sharp rallies in bear markets. So when the VIX looks toppy, keep an eye on it. There's a very good chance we can slam back down here. We get a gap below us, and give the bulls some fuel. The leaders again include biotech. Biotech is having a great day today, up nearly 2%, 6 points. This is key because this is happening on a Friday. One, it kept the MACD from crossing. The RSI is holding 50, the 50 region. Since this is happening on a Friday, it makes the weekly chart look pretty good. Okay, we're seeing a weekly chart. The MACD is going sideways on the weekly, pretty much. RSI moved up, obviously. This is a solid candle, which isn't that great on a weekly. We got some indecision here, but on a relative basis, this is good. We are closing over last week's high right now. If we close right now where we are, we're going to close over last week's high of 317. Excuse me, the close was 313. We're going to close right around it. On a weekly chart, that's huge. That shows a lot of strength. We had a little declining sideways action here. Really, it was a wedge or a pennant, if you wish. This is a classic pennant. Boom, blasted out of it. Tried to give it back. Came back up again. For this chart to move up, to hold the bottom of the range here, and continue to move higher would be classic, would be typical. I'm expecting some sideways action. Again, as I said in my last video, end of January, I think we're going to consolidate. The leaders are going to consolidate, and the end of January, they're going to start to move higher again if the bull is intact. ACT, one of my favorite biotechs, had a ton of moving averages come into it, is holding the cloud right now, regained a lot of moving averages. It's a little off its highs. It was up 3 points today, but it's up over 1%, and it's doing well. It's doing better. It had 3 down days. If you were short, That's a good time to cover. The last day made a new low and then reversed. Um, if it can come out of this downtrend and continue to move higher, and I think it will, it can take another run at the highs and maybe make a new high. This was really not a whole lot of damage. This chart did not inflict a whole lot of damage. We never got close to the 50-day. We started to get close to it. This is really extended from the 50-day and from the 10-day for that matter. So we came back into support, held some moving averages here. So this looks pretty healthy. The RSI is over 60. The MACD is not showing a nasty down cross in a negative territory, and it looks all right. The general markets need to hold up in order for this stock to consolidate and move higher again. I think that's going to happen. I think the gains are going to be gradual. I don't think you're going to see a spike up to 280. But we've shaken out a lot of people on some key biotech names, and they're showing a lot of relative strength. So as long as the markets hold up and stay intact, you're going to see this move up. On any pop in ACT, I am going to lighten up my position, but I'll still leave some on. I have late February calls. I think this is going to pop and consolidate a little bit more, flag out a little bit more, and kind of wait for a resolution at the end of January, and then move higher again if that resolution is bullish. Celgene had every reason to get crushed here, to collapse back, and it didn't. MACD is moving steadily higher. That's a good sign for bulls. This is still a bullish chart. The damage was very contained. These lines are moving higher. The cloud is moving sideways, again indicating consolidation. So you're going to see that move up if you're a bull, but it looks okay. BIB repairing a lot of damage from yesterday. Slammed down, came into really good basing action over here. This has been basing really well, and it rebounded, which was to be expected. It's a strong name. It's got a rising 50-day moving average, MACD sideways. There's nothing wrong here. Gold, I want to talk about. Gold, I've long suspected would be a darling this year, would be a great investment this year. I just didn't think it would take off this soon. I thought we would see weakness through the first half of January and February, and then it would start to find its legs after we tested sub 1,000. We did not test sub 1,000. It's clearly in no in no mood to test sub 1,000. Sub 1,000 seemed to be a great big fake out. This huge candle right here has held. We have not violated the lows. It made a higher low. This is some wild action. It's not classic basing action, but all the moving averages have flattened and are curling up, and the bulls in gold have grabbed the baton and they are running with it. We have a strong dollar, and despite that, gold is soaring. So people don't care about the strong dollar. The world economy is in too much trouble, it seems, for this to ever come back down into these ranges again. Every big selling move has been met with an equal buying fervor, and I see no reason why this can't continue. This is looking very near-term parabolic right now. This really has to settle down. This could give a lot back and still be very bullish. I'm not going to buy here. This is getting a little crazy. It's been up 20 handles, 30, 50 points or whatever, and we went from 1230 to 1280. And that's 50 handles in 2 days. So I'm not in the mood to chase here, but should this come back down, the cloud is going straight up. This should come into support at some point. This is going to be a very key level, 1230. We can come back down and test 1230. It's also the top of this candle. This is a key area. I think 1230 and this ascending trend line is going to hold. I am now bullish on gold. Gold has broken its series of lower highs. All these key levels that had to retake, it retook. It's going to have some resistance up here at 1278 and 1280. So you could see some sideways action. You could see some GLD call options get burnt here. But this is extremely bullish. MLNX is another name that's held up really well in this give back. It's going basically sideways. It looks like it's coiling and waiting for the coast to clear so it can move up again. Note that it is January 16th, so we're at about mid-month. YY is another name you want to keep an eye on. It's in the cloud. Looks a little weak here, but it could definitely continue to move higher. It's taken the recent weakness very, very well. It seems to be acting on its own. Another name I just want to take a quick look at is FireEye. Whoop. FireEye had a great day today. It's hanging in there. It's held this key line. It did get whacked pretty good yesterday, but there's been some unusual call option activity on this name, and it got beaten down really badly when we had our sell-off in December. And there's been a lot of security issues with a lot of major companies. Obviously, the Sony hack. And this is a leader in this space. This is kind of a speculative name, but if they do make some new deals, which is very possible given the news, this could pop. This has been beaten down a bit. Let's look at the weekly. And as you can see, it's kind of been basing between these two levels, really these two levels. But it's going sideways, and it looks like it's done plunging. It looks like there's not too much lower the stock can go. It tried to push below 26, tried again, and the buyers stepped in every time. When buyers do that, reverse below that new bottom, that old bottom, time and time again, the key bottom here was 26 and change. Bought it up, bought it up, bought it up. It's not Yahoo in the 90s. It's not Microsoft in the 90s. It's not going to, soar straight up to its old highs here anytime soon. But this is a good long-term investment. This company is obviously not going anywhere. This is a key sector. They broke out of this range, this key range, and ran into some resistance and sold back down into it. But that's a good sign. This is a nasty reversal candle here. So they need some news. They need some impetus to break out of this range. They're at the upside of the range here. But I still like the name, and it's somebody to keep an eye on. Not having a monster day today, but this is a volatile name, and that can change. So that's about all I have. Keep an eye on the news. This is a news-driven market. This is really wild and sloppy here. Look, we got 0.62 to negative 100 on the McClellan oscillator, and then reverse right back. Most of that gain. That's pretty crazy. We'll continue to see some really sloppy action in the markets. A lot of people are looking for the 200-day moving average, and a lot of people are expecting a big flush. So be careful shorting. This market looks like a short. It feels like a short. The news is bad, but trust the price. Follow the price. Don't trust your instinct telling you the world's going to end and we're going to sell off big time. A lot of major money managers, David Kotok, Kotok, is a bellwether I watch. He's a pretty decent investor. Is still invested fully long. He may have lightened up into the weakness here, but these people don't see anything to derail our present trajectory of growth. Growth has slowed, but that doesn't mean it's dead yet. That doesn't mean recession next month. Okay, growth has slowed, and that has hit the markets. And liquidity is a major concern. The markets want to know that liquidity is going to be there when it needs to be. They want to know if there's going to be a credit event. Greece and the elections in Italy are indicative of a major credit event. Combine that with a slowing economy, and that's going to take a big bite out of the markets, and that's exactly what happened. We're going to get clarity towards the end of the month. Stay cash heavy. Lighten up on some longs into strength. And be careful out there because it's a news-driven environment. We still have economic growth, and we're still in a very liquid environment. So if the bad news can be somehow put to bed or relaxed or even delayed, kick the can has usually been the plan with these people. Do not be surprised if we get a rip-roaring snap here. I don't think we're going to see all-time highs this month or next, but I think these flushes are going to get bought up, and we're generally going to stagger our way higher. We have made a higher low in the markets. Okay, this was a low. The low here was 1972. We tested that overnight, but on this chart, we have made a higher low. That is bullish. Okay, we made a lower low from this candle, but in a larger, longer term, we have made a higher low. So we're going sideways. Uh, Big flushes are being bought up for now, and you want to look for more sideways until some clarity is given by the authorities. So hold off until the end of January. See what they give you then. The news is usually considered to be quite bullish. Even if the news is not so bullish and we get a flush down, people can consider that to be better value to buy. And some good economic news combined with value seen in the markets and some names getting upgraded could see us resume an uptrend or rally back to the middle of the range here. I think the end of this bull market is going to be 2250 or so, 2300. I think that's going to be the peak. I really don't know when we see it. I don't like buying long term from here. This only gives you about 10% upside. 10%, 12% from 2000 is about 2200 and change. When we flush down like that, either it's a setup to really get crushed, or it's a place to create value for a big swing long, okay, for another wave higher. And since it's so early in the year, this is more of a setup to create value for a swing high higher. If this was August, I would be telling you to sell everything and sit tight because the market could absolutely get demolished. For some reason, the market's on a schedule. It makes no sense to me. It's never made any sense to me. I think it's wacko and bizarre, but the way money managers are measured on Wall Street is by how much they made or how much they beat the index. And the beginning of the year for them is a time to buy. They're structuring their year on the long side. There's still a lot of money pouring into the markets, even U.S. markets, from abroad, from Europe, from elsewhere. People don't want to be in Europe. They're hiding elsewhere. A lot of big money wants to hide in the U.S. South America wants to hide in the U.S. And in order to do that, they have to own some stocks and some bonds in the U.S. dollar, okay? And that's going to create a solid foundation for money managers to buy with. They have money coming in that they can put to work. So in a big flush, they want to make sure they don't lose out to the markets this year. It's a chance to buy. And a lot of people have orders set for just under the sell stops of a lot of bulls. A lot of bulls are looking to get out under 1970, which is why I think you see 1970 lost. All the stops are taken out. We flushed to a new low here, and that's a prime opportunity to buy. Shrewd buyers tend to take out the stops and then come in with big buys, big long-term institutional support, and up we go. Down here, and especially down here, fair value, according to the cloud, is 2032. Okay, so coming up to that area, down here, this is a buy setup. This is a buy setup. This is a buy setup. Okay, because this is a reversion back to the mean. So I think any big flushes are chances for you, like the money managers, to put your cash to work. It's scary. It seems really high risk. It seems really stupid. Your emotions, your heart is going to be telling you, get out. We are crashing. The market's never going to go up again. That's simply not the case, okay? We still have consumers with money that are spending it. When they spend it, how quickly, no one really knows, okay? But we've had a lot of near-term weakness. This is mainly caused by the global economy. This is not the U.S. economy falling apart. The U.S. economy is still mostly okay. Whether you believe the hype or not, the numbers say we're okay. Yes, some of those numbers are rigged, I know, but the U.S. economy is still all right as far as the numbers are concerned. So be surprised if tomorrow they say the U.S. economy is in recession and we plummet. Okay, the U.S. economy is just not there yet. The global economy is weak. Um, the hype and the pumping in China and in Asia is getting old. It's wearing off. It's not working as well as it once did. That's causing a lot of weakness. Um, South America, Latin America is weak. A lot of emerging markets are weak. The stronger dollar is hurting their debt markets, and that is rolling back around to us. To us, U.S. companies sell a lot overseas, and that's going to hit their bottom line. But there's still the rotation story coming in of foreigners wanting to own U.S. dollar and U.S. stocks, and that's probably going to keep us above water. That's going to keep us from being in a negative um, down market for a while. We had a nasty sell-off first of the year. Very first week we were down, down, down. So we can have a big rally and still be flat for the year. That's also very indicative of a late stage bull market. Okay. Um, this weekly stotch, I don't like the look of this. I think this is going to move down some more. It can move down, fake out, and move back up again. Just to mess with you, just to be a horrible, horrible thing. Um, but I don't think we're going to crash. I'd like to see 1950 so I can put some money to work. I have some money sitting there doing nothing. It's bothering me. But we don't have to go that low. Okay? We can surprise to the upside, flush a little bit, kind of base, go sideways, and then move up. Um, we're probably going to get a little more panic in the markets to ultimately find a bottom. But stay cashy, stay neutral. Make sure to trim your longs. If you don't want to trim your longs and you want to let them ride, and that's entirely okay, if that's the case, then please lighten up or make sure you own March or April calls, okay, or even June. There's nothing wrong with buying May and June. All right, everybody thinks they gotta get rich next month. They're gonna get rich this week. That is what the market wants you to do. That is what the casino wants you to do. Yeah, you're gonna get rich in an hour. Give me a break. How many people does that really happen to? All right, that's extremely risky. So stay light, stay long, and be patient. You only have to wait another 2 weeks. All right, we'll do it again.